Ever wonder how people are making money without even owning a single stock? Indeed, options trading has magical qualities. With just a few calculated actions, the picture is able to profit, whether the rising or collapsing of the market. Today, we are exploring the realm of options. By the end of this video, even if you are a complete novice, you will know exactly how to make options trading work for you. So stay around if you're ready to master the secrets to generating money in any market, and really grasp how this all works. It's less complicated than you would expect. Section 1. Exploring the fundamentals of option trade. Now let's dissect what option trade really means. Consider your options trade as a reservation. Imagine you are booking a hotel room. You pay a nominal upfront charge to guarantee your place. Fantastic if you choose to remain. If not, you paid for the reservation, but you are not obliged. With equities, options operate in a similar manner. To be able to purchase or sell a stock at a specified price over a designated term, you pay a premium charge. Why thus should one consider options? The truth is that you may profit with options without having one single share of equity. Imagine being able to profit merely from forecasting the direction of the market. That is the ability of alternatives. The best thing is also that whenever your opinion changes, you are not bound to that stock. That is only the beginning. Going forward, we will specifically discuss how to make those forecasts profitable. Section 2. How options might profit you without owning stocks. How then exactly could you profit from options? Let's examine it. Purchasing an option means you are speculating on future stock price behavior. Will it rise, fall, or remain roughly constant? The beauty of it is also that one can profit in either direction it travels. Assume for the moment you believe the price of a stock is poised to soar. You can purchase a call option, and if you are right, you could profitably sell that option when the stock increases. Assume now that you believe a stock is about to decline. Purchasing a put option allows you to cash in without holding any shares if the stock price drops, since your put option rises in value. Are you perhaps asking, is it really that easy? Indeed, in a little bit we will go over the instruments that simplify these movements. Section 3. The two types of option trade. Let us now delve somewhat further. Two primary forms of options are called calls and puts. These two resemble the building pieces of alternative trading. While a put option is the right to sell a stock if you believe it to be declining, a call option is the right to acquire a stock if you believe it will rise. Here's where things truly get fascinating, though. You can benefit from these options without really buying or selling equities. Simply selling the options themselves as their value changes with the market can help. Up, down, or sideways. I will show you how to fully understand the trade and puts to develop strategies that can work in practically every market circumstance. Section 4. Maintaining low risk by high gain. Perhaps you are asking, but options trading is not very safe. Like every investment, there is risk here. Yet, option trade really provides means of control for that risk. For instance, suppose you purchase a call option hoping for a stock increase. Unlike purchasing stocks where your losses could mount up, if you're wrong, the most you could lose is what you paid for that option. Actually, their flexibility is one of the main advantages of options trade. Just trading a modest amount of your portfolio and establishing exit points will help you to reduce your exposure and prevent too lengthy of holding. Consider it as a naturally occurring safety net. Not to fear though, we will next teach you to use particular techniques ideal for beginners seeking to minimize danger. Section 5. Use right now practical strategies. Let us now enter the interesting section, strategies. You may profit with options without diving into the very risky trades. Some techniques are meant to be low risk, even basic ones. Let me discuss two beginner-friendly choices, the covered call and the protective put. For people who already possess a small number of equities, the covered call approach is that you are merely selling a call option on your current stock. You thus get compensated for holding the stock, whether it remains constant or increases only slightly. It's like waiting and gathering a rent on your stocks. Now, the protective put is like having insurance for your stock. If you own any and you're scared it might decline, you purchase a put option to guard yourself. In this sense, the put option rises as the price of the stock declines, therefore balancing your loss. Wondering which approach could fit you most? The next part will go over some pointers to enable you to choose the appropriate approach depending on your objectives and degree of risk. Section 6. Selecting correct approach for your objectives. Finding the correct strategy is all on your particular goals and risk comfort, as options trading is not one size fits all. Are you more at ease accepting some risk for perhaps larger returns, or are you seeking consistent gains? Strategies like the covered call can be an excellent place to start if you want consistency. If you're ready for even more thrills, though, then purchasing call and put options will help you to profit from significant market movements. The secret here is knowing when and for how long to apply every tactic. If you're still learning, don't worry. We will go over some last advice for novice traders and frequent mistakes to avoid so you may start trading with confidence. Section 7. Typical mistakes to avoid as novice. Let's review some typical blunders novices make before you start options trading. One major one is walking in without direction. Like any ability, options trading is one where your results improve with increasing knowledge. One further error is investing too much money on one trade. Though options have great power, you never want to risk more than you are ready to lose. Finally, start small and concentrate on mastering the fundamentals before delving into more intricate techniques. So watch and understand the video carefully. If you're ready to start trading smart, you are almost at the finish line. Now, here's a question for you. What one aspect of options trading excites you to explore or study further about? Drop your response in the comments. We would be very happy to hear your opinions during the discussion session. We have plenty more ideas, techniques, and insights just waiting for you, so be sure you keep tuned. That alert bell will help you not to overlook. Give this a thumbs up if you found it useful. Also, remember to subscribe to get more items like this.